Well, hello. Welcome to Passive Wealth for High Tech Minds podcast. There are lots and lots of IT professionals who work in the industry. These IT jobs are so exhausting mentally, there isn't much time left for such folks to make clever decisions about their investments. Most are unable to put their money in the right asset classes. This is Prashant Kumar from My Realty Gains. I have worked in corporate America in IT and in business organizations for 25 years. My goal is to educate IT professionals like you about the benefits of passive investing. I will be passing my knowledge and will bring guests who have done very well in their careers and can explain the process and advantages of passive investing. So, let's begin. Hello, this is Prashant Kumar from My Realty Gains. You are listening yet another podcast episode for Passive Wealth for High Tech Minds. In this podcast, we invite distinguished guests, industry leaders who have done significant amount of work in real estate investing industry, and we pick their brain to talk about how a normal Joe, somebody, folks in W-2 jobs, how they can make their money work for them while they are doing their job. So today I have with me, Zach Haptonstall from Rise 48. I've been following Jack for some time. Jack, welcome to my show.
Yeah, thanks so much, Prashant. Really appreciate it. Excited to be here today and looking forward to providing some value to your listeners.
Sounds good. I'm going to introduce Jack, a little bit more. Jack was born and raised in Phoenix area. He's the CEO of Rise 48 Equity. He has founded many businesses. He founded ZH Multifamily in 2018. He grew his portfolio to 35 million. He formed the Multifamily Phoenix Association where he had 200 plus members, right? So he retired from ZH Multifamily and PMA in 2020 and co-founded Rise 48 Equity. Jack's professional background includes healthcare sales and administration. He's former president and co-owner of Hospice Organization in Phoenix with 110 employees and $9 million annual revenue. Jack holds master degree from Colangelo College of Business at Grand Canyon University, from summa cum laude with bachelor's in journalism and mass communication. And this goes on and on, But, from a real estate perspective, Jack has been real estate agent in Arizona since 2016, and he's also an official member of Forbes Real Estate Council, a Directors Council member of GPEC, and is #1 best-selling co-author of Success Habit of Superachievers. So Jack has done a lot in his life. You can see he's not that old, obviously. We are here to pick his brain. What are his thoughts? Jack, what are your thoughts about the normal W-2 employees, husband and wife? Our target audience are normal, either a single earner family or double earner family, 2 W-2s coming in the family, and folks really don't have any time for themselves or for their kids. Forget about insight into investing. For a lot of these folks, investing is only about investing in stocks. They do not know what is commercial real estate investing is. If you say real estate, they mean single family, buy a single family and buy one more rental and one more rental. So I want to pick your brain today. Just tell us something about how commercial real estate investing can help such, families.
Yeah, no, thanks so much, Prashant. I can personally relate to, I think, most of your listeners and the people that, you try to educate with your platform here, because I was a W-2 worker. I grew up in a lower middle class type of family. I was taught, you get a degree, you get a good job, and you work there for a long time. And so I got caught up in this rat race, so to speak, myself. And you just kind of get this tunnel vision, right? Where that job is your world. And you don't really realize other opportunities to invest passively into a vehicle like real estate and how it can help you build wealth and help you to generate cash flow. And so I didn't even know any of this stuff until about 2018 or so. So just about 4 or 5 years ago myself. and started listening to podcasts like yours, Prashant, and reading books and trying to educate myself. But yeah, no, I think that, investing passively into these types of, multifamily apartment buildings can just be such a powerful vehicle for investors who, maybe you're really working hard, you and your spouse are working hard, 40 to 60 hours a week, making, what people consider good money, but you feel like you can never truly get ahead, right? Even though you're making what is considered good money, well, if you can invest in these types of properties where it really doesn't take any of your time, you can make that money work for you, right? As you like to say, Prashant, and really grow that money, generate monthly passive cash flow, become tax efficient, and grow the money so that, all of a sudden in 3, 5 years, 10 years, you've created a small fortune, just by putting some money away into these types of investments, which are completely different than the stock market. They're not really impacted by the stock market. I can tell you our apartment buildings were not impacted by COVID whatsoever. And so it's just great to be able to invest in these, what we call hard assets, because these renters have to have a roof over their head. They pay the rent every month, and then that rent is essentially going in your pocket, as an owner of these properties. So I think it'd be a great vehicle. I know that's what you're trying to kind of educate people on, Prashant.
That's an awesome answer, Jack. I would like to know, I mean, I know your journey has been very, very, fruitful. I would like to know a little bit about your journey also, so that people get motivated. I know we all talk about the benefits, but, please share some of your highlights of your journey in last couple of years. As you said, you started in 2018, and just 2022 is a short span of 3.5, 4 years.
Yeah.
Tell us a little bit more about that.
Yeah, no, thanks, Prashant. So, yeah, so, I was born and raised here in Phoenix, Arizona, lived here my entire life. And like I said, just grew up in kind of a lower middle class family. We don't come from money. My parents had no background in real estate, knew nothing about it. I got a journalism degree. So I was actually a live news anchor, sports reporter for Arizona PBS for a short time, because I really liked sports. I wanted to be, a sports reporter. And that was cool at first. Then I quickly realized that I hated it, because you don't make any money hardly. You work crazy hours. It's very political. I was like, I don't want to do this, and so I was like, I need to make money because I have student debt, right? So then I started to focus on how can I make the most money to get rid of my debt and become more, financially established. So I went into healthcare marketing, working for a hospice organization of all things, just something I kind of fell into. I worked as a marketer, worked my way up to director of marketing, and then ultimately became president and co-owner of a large hospice organization here in Phoenix. We had 110 employees. I got my MBA and all the things that we just talked about, Prashant. I was thinking, get the degree, continue to advance, get the high W-2 salary. But even as I was advancing, I was very blessed and fortunate to pay off my student debt, buy a house. So by the time I was 23, I'm making 150K plus a year. By the time I'm 26, I'm making 200K plus a year, making more money than both my parents combined, but I didn't feel satisfied. I just felt like I was kind of stuck and I hit a ceiling. So January 2018, I resigned and sold my equity in that company, and I had no plan. Okay. I said, I just want to somehow create passive income through real estate, but I don't know how I'm going to do it. And so I lived off of savings for well over a year, just burning through cash. And I was trying to figure out, how do I make money through real estate? I didn't want to be a real estate agent. I at first was looking at flipping homes, and I realized that's just transactional. I don't want to do that. Then I learned about mobile home parks. I started cold calling mobile home park owners. I tried to buy one on a seller carry. I had almost 300K of cash that I had just relentlessly saved the previous 4 years with that high W-2 job, following the Dave Ramsey plan. And I got a good bump of cash from selling my equity in that company, but I was living off of this cash and I had no income, and I was just burning through it, paying a mortgage, monthly costs, et cetera. Well, finally I started to discover multifamily. And like I said, Prashant, listening to podcasts just like yours, reading books, started going to conferences, and I learned the power of, multifamily investing and what we call syndication, where you raise money from passive investors. And so, that's when I kind of went forward and decided I want to build this syndication real estate platform. And so, I met a couple partners. We bought our first deal together. That went well. And then we started raising money from passive investors. So since then, we've been very fortunate. And, since then we've acquired 31 different properties, all here in the Phoenix metro, worth over $1 billion, over 5,000 units. We've had nearly 2,000 different individual investors. Now we have a couple different companies. We have a property management company. We have our real estate company. We have over 100 plus full-time employees on full benefits. So we've been very fortunate. But it took me 14 months, Prashant, from when I quit that job to close on the first property. So the first 14 months was just a lot of adversity. And even after I bought the first 3 or 4 properties, I wasn't making any money. You don't make any money the first 2.5, 3 years. So it was a lot of adversity to go through. But just in the last, 18, 24 months, we really, really caught our momentum and make it very successful and lucrative, and very fortunate. And so that's kind of my story, is that just kind of, dove right into it. It took a lot of time to kind of break in, but now, we're firsthand experiencing the results and the benefits of investing in real estate.
Well, you guys have heard it right. Zach Haptonstall, 14, leaving a $200,000 job and not doing anything, not earning anything for 14 months, and then starting the business, acquiring the first property after 14 months and getting into a couple of properties, first couple of years, I would say 2 years, 2.5 years, Jack did not make any money, but persistence paid off, right? I mean, now, as you said, in the last 18 months, your portfolio has grown up to $1 billion, and you have 100 employees. I mean, if you were in a W2 job in last 4 years, maybe you would have made from 200,000, you would have jumped to 250,000 at most, right? So that's the maximum that could have happened. I mean, in your W2 job, you don't get paid, exponentially. You just get paid like 4%, 5%, which doesn't even meet your inflation, right?
That's right.
So guys, you have heard from somebody being, in the journalism, doing the sport anchoring, and then going into the sales and marketing, becoming the director of the marketing, quitting the job, and listening. And trust me, Jack, listening to all the people around you, I'm pretty sure there were a lot of people who would be there to discourage you. Why are you quitting your job, right? Including your parents, your own parents, I'm sure.
Exactly. My own family. You're exactly right. They're questioning what I'm doing. People think I was crazy. That's right.
Right. I mean, everybody thinks that you are crazy. So, I mean, if you have guts, if you can take steps, you can take stands, you can grow if you are in a right area. Right. I mean, if you are in a right asset class, if you are investing into right places, I mean, if you are going in and starting to, play game at the age of 35 or 40, that's a different story. But this is an investing game. You are investing into multi-tenant asset classes, be it multifamily or storage, which are very recession resistant sort of asset classes. For active investors, they grow, right? Jack grew, and we have many other people who grow. For passive investors, also at the same time, Jack said, we have 2,000 plus passive investors in his company, right? I mean, what are their experiences, Jack? I mean, tell us a little bit more about that.
Yeah, no, that's probably one of the coolest parts, Prashant, is because I was able to experience the benefits of real estate actively. But the reality is that most people, and probably most of your listeners, they can't just quit their job and do what I did. And what I did, is very dramatic. It may sound cool, but it's not necessarily realistic for most people. Most people need to passively invest. And that's how all of our investors are. So, most of our investors are W-2 income earners who are looking to diversify away from the stock market and are looking to generate passive cash flow and grow their money in something that they actually have a lot more visibility and transparency into, that they understand. You know what I mean? Whereas you give your money to a financial advisor, they're putting it into a bunch of different stocks of companies that you have no idea what's going on, right? A CEO can send a tweet and completely tank your stock. Okay. COVID happens and the stock market can tank. And I mean, we're recording this near the end of May 2022, Prashant, and we've seen the economy, have a significant downturn as far as the stock market is concerned. Well, through all those periods of time, these apartment buildings have continued to improve, and they've had no negative impacts. So they're not impacted by the stock market, because this is where people live. And so, a lot of our investors are thankful, and that's very rewarding because they didn't know about this. So we have, a ton of new investors and a lot of first-time investors in every single deal, because past investors are happy with the performance and they're referring their colleagues, their friends and family. and it's kind of like the light bulb goes off for them, right? Where maybe they're not going to quit their job and do it actively like you and I do, Prashant, but they can put their money to work working for them passively, and they're getting that passive income, and they know that they're growing it consistently, and it's in a much more conservative type of investment, which is not at the whim of all these other outside variables. So that's kind of the rewarding part, is that, our investors are truly grateful, and, we're all kind of making money together, and we feel like we're truly doing them a service and helping them.
So in a sense, all these passive investors, instead of buying the houses and maintaining them themselves, they are investing with you, and obviously some invest with us also, and they get part of the rent, really speaking, and by doing nothing. And you being a professional person, having a professional property management company, is able to take care of their assets. Really, it is investors' assets.
Yeah.
In a more professional way. Yes, we make some money, but that is well deserved. And probably you are able to make them more money than they would have made themselves, because they never had time to manage their own assets anyway, right?
100%. That's exactly right, Prashant. Yeah, you're exactly right. It's basically these investors are leveraging our time and energy and expertise, because this is all we do, right? So just like when you invest in a financial advisor, you're trusting that advisor is going to put your money into stocks that do well. Well, ultimately that advisor, has no control over how those companies perform, and real estate, is also somewhat reliant on the market, no doubt, but it's actually much more insulated and conservative, because these are affordable housing, multifamily buildings where the majority of the demographic lives. So as a passive investor, by investing with you, Prashant, or at us at Rise 48, you're basically leveraging our expertise, our resources, to get the benefits of what these investments can do. And like you said, you don't have to go buy your own home and rent it out and deal with the tenants. The investors are 100% passive. You sign some paperwork, you wire the money, and then you get a monthly distribution hit your account. You get a monthly report showing you, how everything is performing. And so it's a lot more passive, and it's just a better use of your time. And you may end up getting a better return, like you said, than even if you were to buy your own single family home, but with, much less work and none of the headaches.
Yeah, that's awesome. Thanks for recapping that, Jack. One thing I must say, that I was talking to somebody today, and you kind of alluded it. In the last couple of days, you have seen the market, how the market is tanking, and we have some investors' money in our escrow accounts. And one investor called me today and he said, Prashant, I'm happy that my money is there with you in the escrow account. At least it is not going down.
Exactly. Yeah. At least it's being preserved, right? If nothing else.
Yeah, not normally, they would have lost, 5%, 10%, but at least it is. We were waiting for a property to be closed and it got delayed, and we told them, yes, it got delayed and whatnot. And he said, oh no, Prashant, don't worry about it. My money is safe. It is in the escrow account. At least it is not going down.
Yeah, so that's right.
That was like, an eye-opening kind of a statement for me. I personally don't invest in stock market, and I don't follow stock market.
I don't either. Yeah. So, I have $0 in the stock market.
Yeah, same here. No dollars in the stock market. But coming back to the point, the most, I think what I feel, and I invest in real estate, in other syndications also, because obviously we have money which we want to grow also, along with investing it in our own syndications. I feel like that is one vehicle which I had found when I started investing, where money was just growing. If you see in the bank account, your money was just sitting, there was no interest. But now you invest in the real estate, it was just growing. Your monthly distribution or quarterly distribution just kept on coming, right? So, so what else? Tell us a little bit more, Jack. I want to give us some examples, good deal or a bad deal, if you don't mind.
Yeah, absolutely. Great question, Prashant. Yeah, there's just so many benefits to investing in these deals, because like you mentioned, it's very conservative. So what I tell investors is that, investing in these types of apartment buildings, it's not like investing in like a tech startup company or an app. Like, I'm not going to 10x your money in a year or two, but it's also very unlikely that we lose your money, because these are very conservative investments. And it's more likely we get a lower projected return than what we showed you, but still give you all the money back plus a return. You know what I mean? And when things are good, you can get a very strong return, and potentially double that money in 2 years or less. And that's what we've been seeing, with some of the investments. And so, you get the benefits of that passive cash flow distributions, which is all profits on your money, right? And so it's all passive. And then you get the benefits of any type of depreciation. Okay. And so I'll give the disclaimer, I'm not a CPA, consult your CPA, but our investors pay virtually no taxes on their monthly cash flow distributions because the depreciation of the property offsets the tax they have to pay. So even though you're getting monthly distributions every month hitting your account, you're actually not having to pay any taxes on that. So it can be very, very lucrative in that regard. And, you look at some of like the wealthiest families across the world for decades or centuries, they've all done this exact strategy where they're taking advantage of the tax code. This is nothing new, and it's not illegal. It's perfectly legal. There's just not a lot of education out there, and I think more and more people are now starting to understand the tax benefits of investing in real estate and the depreciation benefits that you can achieve. So you not only get the cash flow, which is passive, you get the depreciation benefits, but then you can get significant appreciation when we sell these properties and drastically grow the money. And one thing that we'd like to implement is what's called the 1031 exchange, right? And for those of the listeners who don't understand what the 1031 exchange is, this is just like an IRS tax code strategy that's been around for decades. You could use this for your own single family investment property. A lot of people do that, where you basically sell a property, you take those sales proceeds and you transfer it to a new investment property. And by doing that, you can completely defer the capital gains tax that you've paid. Okay, so you're deferring that and not paying that capital gains tax upon that sale, which just helps to grow the money even more, leverage it into more cash flow. And then that cash flow is then tax-free because of that appreciation benefit. So, this is something that we like to implement, and we're always trying to do whatever is most tax efficient for the investor.
Yeah, that is awesome, Jack. So much great information. And one thing you kind of hit was these are the tax codes. I mean, these are the tax codes written by government, by IRS. These are nothing illegal. I mean, yes, we are trying to save taxes, and saving taxes legally, basically. That's what government wants you to do. That's why they have created. These are not loopholes in any way. They say that, a poor remains poor because they spend what they earn. Middle class remains middle class because they earn and they spend and they save. Middle class remains middle class, and their saving goes to the bank account or the stock market or whatever. A rich becomes richer because they invest smart. So for us to get from middle class to a rich class, if we start saving our money smartly, you have seen it, I mean, you are the perfect example in 4 years, 3.5 years, knock on the wood, it's so encouraging to hear where you were highly paid professional, then you quit your job for and you remain, obviously there was no cash flow at that time. You were living off of your and taking all the miseries from the family and friends and in the comments and everything. So the point is, if we invest smartly, even if you are W-2 earner, we are not saying, I don't think, Jack, you are saying that you quit your W-2 job and just go to the real estate. I don't think, right?
Right. You don't have to do what I did, but you can take advantage of this by investing with people like Prashant and like us and get the benefits of this and still do your W-2 job and be passive. But like you said, grow the money by investing it wisely instead of saving it, or spending it.
Yes. So instead of saving and investing, invest wisely, and invest in the conservative vehicles, like real estate, multifamily, multi-tenants, asset classes. There could be other asset classes also. But here we talk about multifamily a lot because that has grown over a period of time. So guys, I mean, basically, once again, we are talking with Zach Haptonstall. He's the CEO of Rise 48. Rise 48 has risen in last 2.5, 3 years quite a bit. And congratulations to you, Jack, for that. And the purpose of this podcast is to motivate people who are not able to take first step. Guys, folks, go to Jack's website, rise48.com, or go to myrealtygains.com. Get some education, invest in some of the projects. There are tons of case study I'm sure Jack has on his podcast, on his website,
Right.
And connect and learn more. You don't have to invest everything at once. You invest a little bit in one project, see over a period of time how it goes. You learn to walk first and then start running, right? So slow and steady wins the race in the end. That's my message typically is, guys, go slow and maybe invest with one operator and then another operator and find out who's good for you, basically. And once you do it, trust me, once you do it, you would love it, because that's how I fell in love with this. Jack, just a little bit of my background. I come from IIT India, which is one of the top institute of the country, and I graduated in 1995. I always had that $200,000+ job, $250,000 plus job.
Right.
And I said, listen, I told my wife one fine day, listen, I'm not doing it anymore.
Yeah.
And I have a daughter who's going to college. I said, it's going to be very, very difficult. I said, give me some time. And I hear it every day, So you can appreciate what I'm talking about here now.
Yeah, I know how you feel. That's right.
So, but real estate provides so much opportunity. But you have to spend time. If you want to come in real estate full time, actively, if you want to go into real estate actively, better that you go full time. If you do it as a side hustle, there are times then you could end up making mistake also. That is something which I have learned hard way. And that's what I communicated to my listeners also. If you are going to real estate actively, then go full time. If you want to cling to your W-2 job, invest passively, with folks like, Rise 48, or in our company, we would love to talk if need be. Jack, any final words for our listeners?
No, I don't think so, Prashant. I think you pretty much covered it all. Just all the benefits of investing, in real estate, whether you want to do it actively or passively. I think that it can be beneficial, especially long term, but even in the short term. And there's just so many different advantages. So I think, that's the biggest message I think you and I want to get out there, is just to get people aware of how much of a benefit this can be to people.
Awesome. And how can our listeners reach out to catch hold of?
Yeah, thanks, Prashant. You can go to our website, rise48equity.com, RISE48equity.com, and you can actually set up a call with me on there if you're interested to learn more about what we're doing. You can also email me, Zach, ZACH, at rise48equity.com. Look forward to talking to anybody who has any questions. But thanks for having us on today, Prashant. Really appreciate it.
You are very welcome, Jack. I wanted to connect with you for a long time, but I thought the best way to connect with you is to invite you on my podcast so that we have a strong relationship. Once again, thank you so much. And we'll probably invite you again, as the future, unfolds. Thank you so much for listening to our podcast. As usual, you can reach me via my website, www.myrealtygains.com, and via email, prashant@myrealtygains.com. I would love to hear from you and talk to you about specific needs you may have. Please schedule an appointment with me via my website, again, www.myrealtygains.com. Stay tuned for next podcast. This is Prashant Kumar signing off for today.